everybody. I'd like to welcome you to another Talk About It Tuesday. This Tuesday, we're going to take a moment and talk about getting ready to purchase your first home. So, this is a great video for first time home buyers or just anyone who hasn't purchased in a while and looking to purchase in Michigan. I have Lunden Ware with me today from Direct Mortgage Investors. How you doing today, London?
I'm good, thank you.
Good. I'm just thankful that you took the time out to come on with me and answer some questions that will help potential buyers. Um,
Perfect.
we're gonna just do the question style and just go back and forth and start the conversation from there.
Okay.
Okay. So people think they need a perfect 20 percent down and 800 credit score to get into a home, but what actually counts and matters today?
Credit does matter. Assets do matter. Income does matter. Your debt to income ratio does matter. But to the extent that people think it matters, not really. So 800 credit score, that's like, that's great, but that's not what you need to buy a ticket in. Literally, you don't have to be close to 800. So even for pricing, you're going to get best pricing at 720. So anything over that is like great, but you know what I mean? So credit, you can be in the 500s and buy a house. You
Okay.
can be in the 500s and buy a house. So minimum, you're typically looking at 580, but the caveat to that is sometimes, and I see this a lot, especially in like the Flint, Detroit area, because we got the big three, where people are high earners. They're making six figures, but their credit is in the 500s. That is very common. So the thing that they have to their advantage is called a compensating factor. Oh, I didn't realize my ringer was on. Sorry. Let me turn that off. Okay. Is a compensating factor. So having some money saved is a plus because it's kind of like the more money you have saved, kind of the lower your credit score can be. You have great income. That you can still buy a house in the 500s. So some things I would say to be mindful of, if you dip below a 580, you can still buy a house. You do need to put down more of a down payment though. Typically you're going to be looking at like 5%, maybe even get better what we call findings at 10% down, but 5% really is going to be like the sweet spot if you're coming in below 580. The thing is, a lot of people don't typically have money saved and have that score. They're usually just like a high earner though, or can come across the money faster than most people. So don't be discouraged by a 580 credit score, even if you're a little lower. Just try to think, why is my credit low? And I notice what's very common is sometimes when people know they have bad credit, they don't want to look at it.
Yeah.
You need to look at it.
If you don't
You
look at it, it doesn't exist, right?
you need to stare it down and say, okay, how did I get here? How do I get out of this? So that for sure. 20% down, you do not need 20% down. Minimum down, honestly, is what I would encourage because most people don't have 20% to put down on a house in this economy, right?
Hmm.
So, for instance, I don't know, would you say you can get like a pretty nice house in the Genesee County area for like 200,000? I would think so.
Oh, yeah. Yeah. Average home cost is about 200,000 in Genesee County.
Okay, so in Genesee County, so say you're looking for a $200,000 house, minimum down for FHA is going to be $7,000. Minimum down for a conventional loan is going to be $6,000. So those numbers, especially right now, what I'm telling everybody, if you are working at the big three and you got a bonus coming, or I forget what they call it. They get it every year.
Yeah, that dividend or
That
whatever.
dividend, yeah, you're getting that check. That's when you need to buy a house. If you're
Yeah.
not good at saving and they're just gonna hand you that money, this is the time. And also it's tax time. So if you are anticipating a refund, this is the time for you to have that money to purchase a house. But 20% down, no, you don't need 20% down. The reason that people think they need 20% down is because when you put 20% down on a house, you don't have to pay the mortgage insurance, upfront mortgage insurance premium on the loan, which is an extra cost, but sometimes you just got to weigh it out and say, is it worth me trying to save 20%? Can I save 20%? Have I ever saved this much money?
Right,
And
right,
if you know that that's very unrealistic for you, but you can save a fraction of it, and your ultimate goal is to get in the house, get in the house.
right.
Get in the house.
Yes. And I think a lot of times people think that they need to get their dream home initially.
For sure.
And you really might just need to get your starter home, and that's a pathway to get into your dream home. So,
Yeah, I'm the perfect example.
see, so you already know.
Yeah, no, my,
Um,
my first
so
house is not a dream.
but you live in it now because you invest, right? And you got
Hmm.
multiple properties, so you understand that it is the way to wealth in America. Like real estate is one of
It's
the
the
main
vehicle.
ways. Yeah. I feel like you talked about a lot of myths, so I don't really want to ask that question. I think you busted a lot of myths right there, and you kind of did touch on the credit score of 580. So can we talk about down payment assistance programs that are active right now in Michigan?
Yes. So I do not work with MSHDA, but I did see that on the list. So MSHDA is a great program for people. And also there is what is the other program called? It's on the tip of my tongue. It'll come back to me. But Mishta is a good program. However, right, there's so many programs. And what I think a lot of people do is they brand Mishta as the name for all down payment assistance programs.
Yeah.
So a lot of people ask me, do you do Mishta? And I'll say, no, but I can get you down payment assistance because that's ultimately what they're asking.
Hmm.
So I do work with several lenders as a wholesale loan officer. So some of the lenders I work with offer programs that are 3.5% down, which is the minimum down for FHA. Some of them also offer 5%. So 5% is to also help you with some of your closing costs as well, because your closing costs are typically going to mimic your down payment. Now, I don't know if you put this on the list. I don't think I saw it, but another thing that people should know is your realtor can try to negotiate concessions for you. So a lot of times when I work with realtors, I'll just go into it telling them, hey, this is their pre-approval, but we need this much in concessions. What are concessions? Concessions is when the seller of the property is going to give you a portion of their proceeds to help you close on their home. So I would say 9 times out of 10, I have concessions on a deal because I've already talked to the realtor, like, hey, this is what we need to go in negotiating hard.
Yeah.
So also 9 times out of 10, my clients are using down payment assistance. That's kind of almost, I would say, like my specialty at this point. So I'm getting the down payment covered for you with the loan and then the realtors negotiating the concessions. Now, in Michigan, the max percentage for concessions is 6%. So obviously, sellers don't have to always agree to that, but I would say 7 times out of 10, I'm getting full concessions on the deal. And then I'm covering the down payment with the lender. So, using myself for an example, the house that I'm in right now, we just got in August. The price was well, the listing price I think was 297. We negotiated it down to 280. Max concessions again is 6%. So we got the seller to cover $16,800.
That's
And
awesome.
so that helped us with our closing costs. And
Significantly.
so, you know what I mean? Like I just want people to know like you have opportunities, but most people are just afraid or they think the market's going to crash and there's a better buying opportunity. So, I would say for sure with down payment assistance opportunities out there, if one lender's not a good fit, I have several other lenders that I use for down payment assistance. These are FHA loans though. You can do, a conventional loan now. Rocket used to offer a conventional loan product where they would help with down payment assistance and it was called One Plus. So basically, they would cover 2% of the minimum 3% down for a conventional loan. And then you, the buyer, would bring the 1% down. So that was awesome. Conventional, you have to have better credit score, lower, debt to income ratio. But I would say FHA, it's, I don't want to say it's easy because sometimes the borrowers do have to do a little work first, but I've helped several people just looking at credit because most of my clients do have bad credit. I'm not gonna lie.
Mhm.
And, you know, it's not a deal breaker though. So
Right.
that's the biggest takeaway. Bad credit is not a deal breaker.
There's still several avenues to an end, and
Yeah.
that I feel like that's why I try to do more content that's educational because a lot of things that I didn't learn when I purchased my first house in my early 20s, and I wish I knew,
Mhm.
people just don't know. So this is just another way to share that information that it's a possibility for everybody.
For sure.
Okay, and then you did touch on debt to income. Can you explain debt to income in like very plain English for us?
Mhm.
As
I'm gonna
plain as
try.
it can
I'm gonna try.
get.
So I will say, for example, right? If you are making, I don't know, let's say $4,000 a month, but then you have a $800 car note. You have several credit cards that are several $100s. You have student loan payments. And then I'm going to add this in here because this is happening often now. You have some Affirm payments coming out, some Klarna's coming out. Uh, when we look at your credit report and then we run that in the system against the purchase price of the house you want to buy, it's going to turn red. It's going to turn red if you're then trying to purchase a house. It's got like an $1,800 car note because now it's like you don't have any money left
Hmm.
because you have all these debts you have to pay every month. So I usually try to tell people, hey, if you are serious and you want to buy a house, get away from doing Klarna, Quad Pay, Afterpay, Affirm, all of that, because they are looking at that,
Hmm.
are looking at that. And that's probably the easiest thing to get off your credit, right?
Hmm.
And then credit cards. How many credit cards do you have? I like to tell people look at your statement or your credit report. Just go ahead and look at it. Take the band-aid off and look at it.
Hmm.
Look at what your highest balance is, but your lowest payment. I'm sorry, your lowest payment, but your highest monthly payment. So lowest balance, highest monthly payment.
Okay.
Got that mixed up. The reason is because in your debt to income ratio, I'm looking at what you're spending monthly. So if your monthly payment is higher on a credit card that has a not so high balance, go at that one first because that's going to help your debt to income ratio faster. Even though sometimes people see the balance might be higher and they're like, oh, I got to get this off. Like, no, what is the monthly payment on that? Can
Hmm.
we get rid of that? Also, cars. We have to. we have to get cheaper cars. We have to get cheaper cars. I know everybody has to have one. You have to have a car, right? But sometimes I grew up in a house where my stepdad managed a dealership, so I know all about the dealerships running credit and stuff.
Mm.
If you go in there and you basically have no plan and you just I want a car, um, they will give you the high car note. So if you are in the market to buy a car soon, but you also want to buy a house, I would say look at your monthly expenses, talk to someone about how much would a mortgage payment be for this house if that's the type of house you like. I encourage people to get on Zillow all the time. Look at the type of house you like and then talk to a professional and see, can I afford that? Because if you need a car or you want a new car and the car note is usually what does it for most people,
Mhm.
honestly.
Yeah.
Sometimes a car note is just too high.
Yeah.
It's just too high. And oftentimes it is because the credit is poor. So that just goes back to taking that band-aid off. If you can improve your credit, then you can get a lower payment on your car. You can get a better deal for your house, put a lower payment down for your minimum instead of 5%, you know?
Yeah.
So absolutely, the debt to income ratio is how much are you spending every month?
Every month.
What are you spending your money on? And you have to look at it. Some people don't look at their bank statements, don't look at their credit reports. So if you're serious about your goals to purchase a house, how much are you spending? And honestly, talk to other people because it's good to get perspective. Everybody doesn't have the same credit profile, but sometimes you might see someone with a really nice car and think that their car note is way higher than yours because of what you're paying for something that's not as great or whatever. But what I notice is that it's often much lower
Mhm.
than for somebody to drive a very, regular car. So be mindful when you go in the dealership. Don't get too excited because they will approve you,
Yeah.
but can you then get approved by a house is the
Right.
question.
Yeah.
So be mindful. Your debt to income ratio, number one killer, I would say, is a car note.
Yeah. And then you gotta understand too, it's a plan. So like London said, it's good to know what you're looking for, but then you need to run that by a professional to see what your plan needs to be to get there. Because we can all wish and scroll, but
Mhm.
that's just gonna be wishing and scrolling if we don't set up a plan to get the job done. So yeah, I agree. I agree. So are there any other special programs? I know you said about the down payment assistant. Anything that you specifically have been using for your clients lately?
So for me, it's just different variations of down payment assistance. The other program I was going to mention, it just came back to me is NACA. Now,
Oh yeah, I've heard of
NACA is a phenomenal program. However, you have to have some type of patience. You have to have patience because I know one thing that flusters people a lot with this process is providing paperwork. The documentation is not a lot. So just think about W-2s last 2 years, pay stubs last 30 days, bank statements last 2 months, unexpired ID. If you have a retirement account, 403B, 401k, I usually get the most recent month statement. And if you're a first time home buyer, you won't have a mortgage payment anyway. So I wouldn't need that statement. But that's it. Now, as you're in process, depending on how long it takes, might need those same documents again, pertaining like might need updated bank statements, might need updated pay stubs. It is very frustrating for people sometimes to get that paperwork. Now, NACA is going to really get in there with the forensic files and look at everything you do.
the forensic file.
Yes. And it takes months.
hmm
So it's a great program though, because you cannot get a lower interest rate than you can get with NACA, basically.
Yeah.
Wherever the industry is, they're going to go lower. Now, um, I have had people come to me after being in that program because they simply just cannot wait that long. I know some people take six months to a year to finish the program, so it's just not realistic for some people. Um, when you can just really buckle down 2, 3 months, really save. I have I have told some of my clients like, hey, you might gotta get some noodles for the month and eat at home. Maybe you gotta tell some people, hey, I can't come out this weekend, or is if it's your treat, sure.
Mhm.
If not, I can't go. I'm trying to buy a house.
Mhm.
And some people do it and they live in homes now.
Yeah. Gotta lock in.
You do. You have to lock in. Some people are ready right now and they think they're not. And now
Mhm.
all they would really have to do is send me documents.
Yeah. It'd be the big step about as soon as I'm okay, well, I'm gonna connect you to a lender, and it's like, oh, it's crickets for a minute, and it takes a lot of encouragement sometimes. But I've had clients to where we work together, I send you to the lender, and we may not close for another 8 months to a year, but you got started, you made a plan, and then we got to the closing table that way. So
Yeah.
yeah, it all works out. Is there anything else that you'd like to share with us right now, or any tips that you live by to tell your clients?
I would say, and I say this to people all the time, if you are renting right now and you're going to take that leap, you have to realize once you're pre-approved and you're looking for houses, a lot of times you're getting more of an aesthetic at your apartment than you are when you purchase your home. Your home is probably not going to look like your apartment is as far as the amenities and you know what I mean?
Mm-hmm.
That's the part you have to do because it's going to
Yeah.
be your house. Sometimes, honestly, most of the time. Because what I realize is some people will be willing to have a more flexible budget to rent a luxury apartment
Yeah.
as opposed to investing in a house.
Mm-hmm.
They feel like if I'm buying a house,
It
I
needs
should
to look
have
like,
granite countertops too. I should have stainless steel this. I should have, you know, and it's not apples to apples.
yeah.
So I think that because I've had a lot of people in process looking and they can't find what they want in a house because they're used to certain things in their apartment. But the biggest thing to note is you're only maybe going to get that deposit back, right? And
Mhm.
that's I don't know, $1,500 now.
Yeah.
So that's it. And it's easy to stay in your apartment because you're comfortable and put it off next year. And I encourage everyone who is renting to calculate how much money have you been spending on your apartment? Because typically it's over like $70,000
Mm-hmm.
in just, 3, 4 years.
Mm-hmm. Yeah.
You're typically spending that much money and it's just gone as opposed to getting equity in your home and being able to pull that out to do something else. So that is, I would say, my biggest takeaway.
Yes, it's a difference. You're not just paying for a monthly a place to live monthly. You're paying for an investment for
Yeah,
your future. So
for
yeah,
sure.
I agree. Well, London, I definitely appreciate you coming on and sharing all this information with us, and I'd love to have you again. So thank
Sure. You're very
and
welcome.
I will be back. How can we contact you, London, if anybody wants to contact you for a mortgage?
Yeah, 810-410-5180 is my phone number, and my Instagram is at Lun the Broker, LUNTHEBROKER.
All right. She's a wealth of knowledge, not just a loan officer, but also an investor. So
Yeah.
look for her and her content. And Artist Porter, your favorite Michigan realtor, 810-522-3407. See you next Talk About It Tuesday. Have a good